You're watching the latest financial news with VEVOFX. It's Thursday, the 7th of December, 2023. So, panic ensues in the global financial domain and the Forex market as the Western Texas Intermediate, the WTI, plunges below the $70 per barrel mark. And what were the catalysts for this plummet? Well, concerns surrounding China's oil demand and the lingering uncertainty over OPEC Plus production targets is one of them. Investors find themselves on the edge of their seats as WTI extends its downward trajectory, hitting its lowest point since July. Well, recent data reveals a significant drop in oil arrivals, plummeting to 10.33 million barrels per day. That's a 10.4% dip from October. And this decline intensifies concerns about the Chinese economy and exerts additional selling pressure on WTI prices. Concurrently, OPEC Plus members, including Russia, failed to reach a unanimous decision on production targets, adding an extra layer of suspense to the market. Fast forward to the present, an upbeat US inventory report has amplified existing concerns among traders. WTI experiences a slide of over 3%, triggered by an unexpected rise in US gasoline stockpiles, overshadowing the fall in crude oil inventories. The US Energy Information Administration reports a substantial 5.4 million barrel increase in gasoline stockpiles, deepening worries about potential demand destruction. Adding another twist to the narrative, OPEC Plus agrees to a voluntary production cut of 2.2 million barrels for Q1 2024. However, doubts loom large as Saudi Arabia and Russia hint at a potential extension beyond March. Well, the market sentiment is critical here, with negativity prevailing and investors closely scrutinising for any signs of a shift. Daily charts depict WTI caught in a downtrend, firmly under the control of the bears. Key levels such as the breached daily low of $7.10 pave the way for further downside. Traders, ever vigilant, are eyeing potential support areas, and that's including the June 28th daily low at $67.10. Conversely, a reclaim of the $70 barrier could potentially open the door to testing that November the 16th daily low of $72.22. Now, as we connect the dots, let's explore how this turmoil in the oil market might be echoing through the vast halls of the Forex market. Well, oil prices, especially WTI, exert a profound influence on currency dynamics, and here's why. The currencies of nations heavily reliant on oil exports or imports are directly impacted by shifts in oil prices, of course. So, as WTI plunges below $70, these currency pairs may experience heightened volatility and fluctuation. Zooming out, the global economic picture painted by these oil market tremors can further influence Forex dynamics. Economic indicators such as GDP growth, inflation and trade balances are of course going to suffer considerably due to oil prices. The slowdown in China's oil demand and the uncertainty around OPEC Plus production targets raise concerns about global economic growth. Forex traders worldwide are closely monitoring these developments, adjusting their positions in response to this shifting landscape. But there's more to this story. Geopolitical events such as the escalating Israel-Hamas conflict and US officials enforcing oil sanctions against Iran inject an additional layer of complexity. Geopolitical tensions are also sending shockwaves through the Forex market, influencing risk sentiment and triggering those shifts in currency valuations. Traders must navigate not only the economic indicators stated earlier, but also geopolitical developments to make informed decisions. And let's not forget the pivotal role of central banks and their policies. The recent data showing a 3-month high in Americans filing new unemployment claims raises questions about the US economic recovery. This, coupled with a drop in retail sales, strengthens expectations that the Federal Reserve might refrain from further interest rate hikes. Central bank decisions have a domino effect on Forex markets, impacting currency values and, of course, those exchange rates. Now, gazing into the crystal ball that is our future, it's safe to say that the volatility in the coming months could be a blessing. Forex traders should be poised to seize opportunities arising from upcoming events. As we all know, The US weekly jobless claims data and the highly anticipated US non-farm payrolls report hold the potential to significantly impact the USD-denominated WTI price. Traders should closely monitor these events and seek cues for potential forex trading opportunities around those WTI prices. Well, we can't always predict the outcome of these trends, but we have seen these patterns and we know what an upcoming report could result in. We know what might happen before the report, and we also hope the outcome of the news doesn't break our bank. So stay updated, marry the news and carry out your TA. It's not the end of the world. But that's it for today. Do stay tuned for updates, and remember, of course, in the world of finance, knowledge is your most potent currency. So happy trading, and that has been the quick news brought to you by VEVOFX.